Hey everybody, welcome to Trading Capital. I'm Curtis Scouten, head market analyst here. Today is Friday, April 15th, and we're jumping into a gold technical analysis, fundamental analysis, and cycle analysis. So from top to bottom, we are going to discuss gold and the implications of a falling gold price or a rising gold price. So jumping right into the chart, you can clearly see that we have had two resistance points. First resistance, second resistance, which we broke through on our major impulse move to the upside before testing the all-time high made back in 2020. So as you can see, we've had a nasty reversal off of the highs, and you did not take out that previous all-time high and confirm above it. So therefore, on a technical basis, gold has done what is called a failed breakout. And failed breakouts are bearish in the short term for the price action. And let me be clear, here at Trading Capital, we mostly trade capital and make money with volatility in certain price swings. However, we do have investments that we hold for the long term, and physical gold holdings is certainly an investment for the long term, one that we don't trade. That doesn't mean we don't trade around gold based off of what the price action and patterns are telling us and what the charts are telling us to do at any specific moment. So we do hold gold for the long term, and that is our insurance portfolio hedge. And if the system, ever has some sort of faulty electronic attack, some cyber attack, or simply the fiat currencies just collapse or the economy collapses. So gold is the insurance hedge, but we still trade a large percentage of our trading portfolio in gold when the setups are there. So right now, we think gold is still going to fail and trend a bit lower before the macro pattern takes hold, and gold obviously sets new highs later in the year. So we think, despite the recent price action in gold and the geopolitical strife around the world that has been driving the price action of gold, we ultimately see in this pattern and through other cycle analysis and comparing how other asset classes are performing, we see gold falling. And a couple reasons why is it looks like you've broken out of the two support levels, so the two resistance levels, which now technically this is support and this is support since you're trading above it. But the key area we're watching, there's two key areas. So we are always watching this topping tail here, this one that was made on February 24th, this huge reversal candle. And we have not closed above that and confirmed on a daily basis. So right away, that is a red flag for me as a trader. And then the second level that we're watching is this closing of your major red bar low reversal candle. So that's going to be a huge level of resistance, and ultimately closing and confirming above those will then signify to me a potential trend change to the upside. But it looks like now we've had a 1, 2, 3, 4, 5, 6 candle count run into resistance. And typically when you have this big move up, float up into resistance, you're naturally going to pull off of it and consolidate. The question is this pattern going to have bullish consolidation, or is it going to break these key pivot close tops here and start trending lower to eventually test the support? So we ultimately think the price action of gold is going to, let me just get my pen tool out here. We ultimately think the price action of gold is going to stop here or potentially here and start to trade lower to your support range. Now, I ultimately think as a trader and an investor, I think we're going to potentially get a better buy level for silver and for gold. And I think there's potentiality for gold to flush all the way down to here and down to here. And if for some reason it flushed any lower than that, that would be an amazing opportunity to pick up extra physical or paper trading holdings to capture the bullion opportunity. So ultimately we think gold is heading lower, and a couple reasons why. Well, you have major resistance, you still have this bear flag pattern at bay, you still have a failed breakout which needs to be cleansed, and this is not properly cleansed. And when you factor in what has transpired, so right now we have a war, geopolitical strife, uncertainties, so the fear trade aspect is there for gold, check. And then we also have economic data, of which inflation is now 8.5%, a 42-year high, which is incredible. When you think about the last time inflation has been that high and what the gold price was doing, it's a long period, it's a long time frame of history that most investors and traders have not experienced in their career. And I certainly haven't, but I'm a big proponent of studying what transpired during those elevated times of inflationary and monetary and fiscal policy. So right now, what we're witnessing is first of all, I'm going to start by comparing the US dollar. What we're witnessing in gold and the US dollar is something that we have seen before. So simply when we look at the US dollar here, let me just bring up my DXY, new pane. Oh, and I do have it down there already. So here down at the bottom pane, this is the US dollar in the orange line. And what's interesting about the US dollar is typically when the US dollar is rising, gold can also rise with it. But when the US dollar has that final push higher, that's when it typically puts tremendous amounts of pressure on gold. And typically a stronger dollar and the environment that we're heading in, where we're tightening interest rates, we're reducing the balance sheet, essentially tightening monetary policy, that's typically more bullish for the dollar and bearish for gold. Now, the point in time where it starts to change, where it becomes bearish for the dollar and bullish for gold, is really at the height, the peak of the tightening cycle. So gold has a tendency to really sniff out when the central bankers are reaching the peak of their tightening cycle. And once you reach the peak of the tightening cycle, that's typically where the trend changes, where dollar starts to fall, because now it's to the point where you can't strengthen anymore and it's only going to fall to more accommodative policy from here. And that's typically where gold shines and starts to sniff out the loose policy once again. It's that turn in the financial policy and dynamics of the market. So just keep that in mind. It's always the turn that you make the money. It's the big policy turns or the big trend changes. And if we go to the weekly basis of this chart, gold you can clearly see, let me just get rid of this tool for now. Gold you can clearly see has been trading in this big arc formation since August of 2011 to basically today. So over a 10 to 11 year arc, and you can see the arc has acted as support along the way, which is a tremendous long-term trend to have to respect. However, what's interesting about this price action is gold failed. So in my technician experience, once you have a failed breakout and you have a significant topping tail, a weekly topping tail, might I add that will hold tremendous resistance before it ultimately breaks down and has to head to a lower range to cleanse the failed breakout. But when we look at the dollar, so this is what I want to bring to your attention. Here, during this period, during gold's big rise from 2018, you also had the US dollar rising. So they were almost rising in tandem. A rising dollar plus a rising gold price. So typically you don't see that, but you do see that from occasion in cycles to cycles. But the important distinction when gold and the dollar is rising is you reach a point where the dollar has this blow off top, so to speak, like we had here in March, where we had the COVID crash and everyone ran for the US dollar for a sign and store of safety. So you had this blow off top in the dollar and you had this massive collapse in gold. And then what ended up happening is once you reach that peak in the dollar, which just so happened to be the gold bottom, gold really started to move and push to new highs once the US dollar price started making this bear flag consolidation. And eventually once it broke that bearish consolidation, that's where you had this power move to the upside. And then a new cycle started. the US dollar eventually started having this rounding base formation, and typically gold was also going through its consolidation. And then you've now had this straightforward bullish trajectory on the US dollar. But once again, we're close to that peak US dollar level, which typically means there should be a final flush out in the metals or gold if we're going towards previous cycles. So if it plays out like the previous cycle where we have this strong blow off top in the US dollar, which is a likely scenario based off of the price action that we're currently speaking, it could suggest that gold flushes down, has one more flush into major support, and will be a tremendous buying opportunity. That's ultimately where we think gold for a nice tradable opportunity it will be. We are bullish on gold, but we're just a stickler for our trading prices. We hold gold for the long term, so ultimately we do expect it to go higher, and it is that insurance aspect. But if we have that blow off top in the US dollar, it's likely that gold will have pressure to the downside. And then let's take it another step further and deeper into the analysis. So I want people to really notice what has transpired here. So here you had your top in August of 2020. That was your all-time high. And here, just recently, you had your test of the all-time high top in March of 2022. So you kind of have this double top scenario with a weekly topping tail. So just remember those two. And then when we scroll all the way back in history, I'm just going to take the US dollar out of the equation. Remove that. When we scroll back to basically 1996 all the way to here, 2004. This is representative of the same cycle that we've currently went through, where gold had this multi-year basing formation, and then this all of a sudden this big sort of power move to the upside. And this is where I believe we are, where gold has traded up, 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 and look at the similarities, almost identical, where you've had these two double top scenarios at the end of the arc formation. And then look what happened to gold. You put in this weekly topping tail, and then all of a sudden this hard flush to the downside. And that's the really cool correlations that we have to observe as traders. Is you have this double top scenario with the weekly topping tail at the end of the arc formation, and when we go to the current cycle that we're in, look at the cycle that we've had. Double top formation at the end of the arc, the multi-year arc, double top, weekly topping tail. Is that not freaky, the comparisons in the cycle that transpired today and last year with the cycle that happened in 1995 all the way to the 2003-2004 cycles? But if you notice what transpired after that is once you had this final flush out, which we believe is going to happen in gold because the cycles are very similar in nature, we believe once you have that final flush out, it's going to be a tremendous rip-roaring rally. And look what transpired after that. In May of 2004, gold ran basically up 351%, over a, let's see, is that an 8-year period? Roughly a 7-year period, 351%. So that was an astonishing move. And we have once again put in this multi-year basing formation with this bull flag cup and handle pattern that I do think is bullish. But I think surprisingly, because there's so much bullish sentiment, I think that we're going to have that one final flush out, which will be a significant buying opportunity. And typically, if you notice, the beautiful thing about this, let's just throw up a beautiful fib retrace from the low of the gold to the high of gold. And if you notice the areas of consolidation, so here we have this 382 fib line, which just so happened to be your 1, 2, 3 triple bottom in gold. That is powerful level. You had 3 opportunities to buy. If you bought on all three opportunities, you would be up on your investment significantly today, with potentiality of trading gold and making a substantial rinse and repeat profit. So it's really cool just to show you how technical gold can be as a longer term weekly analysis or investment asset. But it's really freaky. The double tops here are very, very similar, pretty much near identical to the ones multi-decades ago. So if we get that flush, buy, because it could be one of the greatest rallies in the metals that we see in our time. Hopefully all this analysis helps. Typically we're going to monitor what rates do when they reach a peak. That's usually where gold has the final turn to the upside. It's not as rates are rising, but it's when it reaches the peak, because that means they're going to start declining from that point on. And once rates start declining, that's the signal to the market that loose policy is once again taking hold. It doesn't happen overnight, but loose policy and risk on starts taking hold risk off assets start taking hold in the marketplace, and algorithms and institutions slowly start changing the percentage and weightings of their portfolio to favor the macroeconomic conditions set by our central bankers. So it is the turn in rates, it's that peak in interest rates that gold usually sniffs out and starts breaking out. But until we have that peak and rates are continuously rising with a strengthening dollar, we think gold should fall down. And it could coincide with some sort of resolution. Just remember, we're one announcement away from a potential resolution which could send gold down and eliminate the political strife and fear trade that it has seen for several weeks to months. That being said, I don't think escalation in Ukraine is going to affect it that much more at this given point, because I think it's Putin has bombed, he's killed. How much worse can it get? Are we really going to go into nuclear war? I don't think so. So in terms of the war getting worse, I think it's hit its level of disgustingness, and sort of hope there's some resolution for the citizens' sake and the innocent lives being destroyed. But we still have to keep in mind the current opportunities in our economic landscape and financial landscape. So that being said, hope all is well. Stay tuned for more updates, and we will